So now guys, the time has come to take a look at candlestick patterns. Candlestick patterns is one of my favorite concepts in technical analysis because they are pretty simple to learn, and if used correctly, they can be a very powerful tool and give an indication of where the price is likely to go next. So, what are candlestick patterns? Well, candlestick patterns are visual representations of price movements during a specific time frame that gives hints about where the price will go next. Or to be more specific, where the price is likely to go next. No candlestick pattern can predict price movements with 100% certainty, and as with all technical tools, they are best used when you combine them with other technical variables. And when it comes to candlestick patterns, they are often relatively small. We are talking about maybe 1 to 5 candles. If you, for example, compare candlestick patterns to chart patterns can often be much larger, as you saw earlier in the course. And we also have different types of candlestick patterns. We have bullish patterns, which signals potential price increases, and we also have bearish patterns that signals potential price decreases. We also have reversal patterns, and reversal patterns indicates a potential change in trend direction. So remember the inverse head and shoulders we talked about? That is an example of a chart pattern, a reversal chart pattern, because before the pattern appears we have a downtrend, and the goal of this pattern is to reverse the price to the upside. But when it comes to candlestick patterns, these are often much smaller reversals. So if you, for example, have an uptrend, we can find a reversal pattern that simply reverses the pullback. So these are often much smaller reversal patterns compared to chart patterns. And we also have something called continuation patterns. A continuation pattern should suggest that the move will continue. So once again, for example, if we have a trend, you might find a continuation candlestick pattern within the actual impulsive moves that sort of suggests that the impulse will continue. Now let's take a look at some of my favorite candlestick patterns that you definitely need to know about. The first candlestick pattern you need to learn is called the bullish engulfing pattern. And this pattern is a complex pattern. Why do we call this a complex pattern? Well, I call all the patterns that consist of 2 or more candles complex patterns. The direction here is bullish and the type is reversal. So before the pattern we have a downtrend, and these 2 candles are the actual bullish engulfing pattern, and the goal of this pattern is to reverse the price to the upside. So to identify the pattern, you first need to identify a move towards the downside, and remember here that this move can be a pullback, so it can simply be a pullback in an uptrend, and the goal of this pattern is to reverse the price. The first candle of the pattern is a red one. And the next candle is a large green candle that opens below the real body of the red candle and closes above the real body of the red candle. So it needs to open below the close of the red candle and close above the open of the red candle. It's also fine if you have the red candle like this and that the green candle opens at the same level of the red candle but closes above. This right here can also count as a bullish engulfing pattern, because in some markets the next candle will always open where the previous candle closes. So both of these variations are fine. Alright, so let's jump back here to the chart. You are probably, very familiar by now. This is the 4-hour time frame, US dollar measured in euro. And here I actually want to show you guys a bullish engulfing pattern. If you look closely, you can see that right here we actually saw a bullish engulfing, right? If we zoom in on this candle, you can clearly see that this green candle opens below the body of the previous red candle and closes far above the body of the previous red candle. When this candle closes, so when this 4-hour candle is done, the bullish engulfing pattern is confirmed, and this is a potential buy signal. But remember here, in order to find a good buy signal, what we want to look out for in our trend continuation strategy is that we want this bullish engulfing to come at a support level. And here you can see we have a support, and this support comes from the swing high right here. The price went down, we broke above this level, and then with this bullish engulfing pattern, we tested this previous resistance as support. So this right here is a valid buy signal, so we take our long position, and where do we enter? Well, the most common way to enter the bullish engulfing is to enter here at the candle close of the green candle. That is when the pattern is confirmed. And as for your stop loss level, you know by now that we have a few different methods to set stop loss. A simple method is to set the stop loss below the support, so you can set it right around here. The second method is, remember to use the ATR indicator, which we have down here. But to keep it simple, for this example, we can use a fixed risk to reward. So we set the stop loss just below the support level, and using a risk to reward ratio of 2, your trade would have looked something like this. You can see this was a very nice example. Just a few candles later, we locked in some nice profit. The next candlestick pattern you definitely need to learn is the hammer pattern. The hammer pattern is what I call a simple pattern because it consists of only one candlestick. The direction here is bullish, and the type here is once again a reversal. So before the pattern, we need to see a move towards the downside. Once again, this can either be a pullback or it can be a larger impulsive move. Then this right here is the actual pattern, and the goal of the pattern is to reverse the price to the upside. To identify the pattern, what you're looking out for is that you're looking out for a candle with a small real body and a long lower wick. And we want this wick to be at least twice the size compared to the length of the real body. And preferably we want the wick to be maybe 3 times or even 4 times as large as the real body. Also, when it comes to the upper wick right here, we want this wick to be either small or non-existent at all. As a rule of thumb, we want this wick to at least be smaller than the body of the candle. But now let's jump back here. We're looking at the exact same chart as before. I think it's a good way to, just show the same chart all the time, so we can see that these kind of signals happens all the time. And the question here, can we find a hammer on this chart? Well, I can't really find a good hammer here. One could argue, if you look at this candle, you can see this candle right here. Let me actually zoom in here even more so you can clearly see. You can see for this candle, we indeed have a small real body, right? And we have a pretty long lower wick. We can see that this wick is probably more than twice as large as the real body. So if you only look at the actual pattern, this is actually a hammer. But remember here, in order to have a valid hammer, we want the move before the hammer to be a downwards move. And in this case, we can actually see that the candles here before the hammer was pretty much just going sideways. By the way, these two candles right here have a special name. They are called doji candles, and they basically represent market indecision. But for now, we can notice that we did not really see a downwards move from this candle. And the other problem with this candle is that it did not appear at a support level. You can see our support is all the way down here. So this candle pretty much appears in the middle of nowhere. So in this particular case, this was not really a good signal. And this is something very important about trading. You will find sort of small signals all the time. But we as traders only want to focus, and we only want to take trades on the best signals. Alright, so next I want to take a look at the bullish momentum pattern. This right here is a super useful pattern because it happens all the time in the market. This right here is a simple pattern because it consists of only one candlestick. The direction here is bullish, and the type here is continuation, meaning that the goal of this pattern is to continue the preceding uptrend to an uptrend even after the pattern. However, it's a bit too simplistic to say that a bullish momentum pattern is only a continuation pattern, because a bullish momentum pattern can also act as a reversal as well. For example, many engulfing patterns will actually be both a bullish engulfing and a bullish momentum at the same time, and you will soon know why. Because what is a bullish momentum pattern? Well, I like to define this as a candle, a strong green candle, that is at least twice the size of the previous candles. And preferably we want the momentum candle to be even larger, maybe 3 times or 4 times as large as the previous candles. And as a rule of thumb, what I usually do is that I measure around 3 candles before the momentum candle appears. And if the actual momentum candle is at least twice the size, I will consider this a bullish momentum. And let's jump back here to the same chart as before. Let me delete this one. Let's see if we can find any, let's see if we can find any bullish momentum candles. Well, if we take a close look right here, we can see a strong green candle. We can also see that before this candle appears, we have a slight upwards movement. And what we also notice, if we take a look at the previous 3 candles, we can see that the body of this candle is more than twice the size compared to the bodies of the previous candles. So we can consider this a bullish momentum. Another good thing about this momentum candle is that we actually see the candle coming in here near a support level. This was not a perfect support because the price actually dipped below just slightly. We saw like a few fake outs of this level. But remember from earlier in the course, we are still in an uptrend because we are still printing higher highs and higher lows. As long as we don't break below this area right here, we are still within an uptrend. This video was just a short clip from our full technical analysis trading course. To watch the full course, simply click or tap on the screen right here. I hope I will see you all in the full video very soon. But for now, take care. Ciao, ciao.